Do you or your partner earn over $70,000 a year? Have you been reading about all the doom and gloom in the housing market and starting to feel like buying a home was an impossible dream? Well, today we're diving into a question many of you are asking. How much house can I afford if I'm earning $70,000 a year? And the good news is you probably qualify for buying your first home. The question is, can you actually afford one? We're going to go over if you make over $70,000 a year, what you qualify for, what you can actually afford, what your budget should actually look like, and we're going to have a bit of a peek about what houses you can afford across the country. So if you want to get a foot in the door of your first home this year, then this is for you.
Welcome to the Buying Your First Home podcast, your personal guide through the Australian housing market. Here we tackle the big questions and the small details that come up when buying your first home. From financial prep to finding the right neighbourhood, we're here to ensure that you've got all the knowledge at your fingertips. So let's take the first step towards unlocking the door to your new home.
First things first, let's talk about housing affordability. When we talk about housing affordability, we're referring to how much you can comfortably spend on a house without straining your finances. It's not just about the price tag of the property. It involves considering your debts, savings, and ongoing expenses to ensure you can actually afford the home you've got your eyes on. Understanding your affordability is pretty important before you start even looking for your new home. It saves you time by narrowing down your search for properties within your budget, prevents a lot of headaches from falling in love with a house you just can't afford, and more importantly, it ensures you won't end up in a financial position where you're in a pinch after you bought the home. Knowing your limits will help you make an informed decision and keep your dream of home ownership both exciting and realistic. So let's dive deeper into how your income, specifically a $70,000 a year income, influences the home buying process in Australia. Ultimately, the amount of house you can afford is based on two things: your borrowing capacity and your deposit. Borrowing power is pretty much how much a bank is willing to lend you for buying a home. It's determined by several factors, including your income, debts, credit history, and current interest rates. Essentially, it's the bank's way of saying, based on what we know, this is how much we trust you can repay. For someone earning $70,000 a year in Australia, the borrowing power can vary widely depending on these factors. Different lenders will have different criteria, risk profiles, which means they're going to be prepared to offer you a different amount from different loans, which means they're prepared to offer you different loan amounts. For the sake of simplicity, let's assume just a moderate lifestyle, no debts, no HECS, and a good credit score. In that case, your borrowing power would be around $346,000. Also, this number includes around $100 per week for body corporate or strata fees. This affects your borrowing capacity with a number of banks. Banks will factor this in, and a higher body corporate or strata cost will reduce your borrowing capacity. Remember, this borrowing capacity number isn't set in stone. Lenders will look at your entire financial situation, including how much you've saved for deposit. Speaking of deposits, they play a big part in not only determining how much you can borrow, but also the overall value of your home. Let's have a look at that next. With a 10% deposit, you're looking at putting down $34,600. This increases the total value of the home you could afford to around $380,000. Bumping up to a 15% deposit means you'll need $52,000, bringing the potential value of your home to $398,000. If you can stretch, or you're one of the lucky few that has a 20% deposit, you're going to require $70,000, meaning you could buy a home for $416,000. But if you're applying as a single person with no kids on a $70,000 income, your budget would be around $380,000 to $420,000. So the next question is that enough to afford a home in Australia in 2024? Well, for that price, you may not be able to afford a home in a prime location, but let's look at some options. Keep in mind, your first home doesn't need to be your forever home. It can be a stepping stone. You could turn it to an investment in the future, or potentially sell it if the value goes up and use the increase to buy your next home. Starting with Queensland, Logan Central and Woodridge offer affordable units, and you can still be pretty close to Brisbane without living in the hustle and bustle of the city. These areas have growing amenity and access to public transport. In WA, places like Osborne Park offer units close to Perth, allowing you to get the perks of city life, dining and shopping and entertaining at more affordable prices. In the ACT, Watson is a pretty good gem for unit seekers looking for a bit of a blend of urban and green living, and just pretty close to Canberra, perfect for young professionals. Victoria, there's West Footscray, Travancore, suburbs that are changing pretty rapidly and pretty popular because of their proximity to Melbourne CBD. In New South Wales and Sydney, you're probably going to be looking a bit further away, like in Kingswood or Mount Druitt areas in Western Sydney, giving you access to units and transportation to get to and from the CBD. In Tassie, Glenorchy stands out as a bit of a place for value and gives you a bit of that lifestyle being near Hobart and a bit of a balance between city and nature. If you look further away from the capital cities, you're going to get more value, but obviously it depends on your work. In New South Wales, areas like Tamworth offer homes with proximity to lifestyle and give you a bit of a change of pace. In Queensland, you can go further out. It's like Dalby and Chinchilla, where you get houses that are a bit more affordable, heaps of land, but obviously a bit far from the city. My point here is there are places you can buy even in the cities. But there's one more thing we do need to cover. It's the true cost of buying and owning a home. Being able to afford a home is more than what the bank's willing to lend you. There are some additional costs that you need to be aware of. First up, let's look in the buying process. Stamp duty. This is a tax imposed by the state governments on property purchases. The amount depends on the property's value and locations, and in a lot of cases, first home buyers do get exemptions for this. Building and pest inspection fees. Before purchasing, you definitely want to do a building and pest inspection. They can reveal structural issues, pest infestations, and things that can cost you a lot in the long term. These cost about $500. Legal fees. Hiring a solicitor or conveyancer to manage the legal aspects is essential, and they handle the transfer of ownership, ensuring all legal requirements are met. Loan application fees. Some lenders will charge a processing fee and settlement fees to settle. Mortgage insurance. If your deposit is less than 20% of the purchase price, you may pay lender's mortgage insurance. There's currently the home guarantee scheme, which is pretty amazing if you're a single parent, a first home buyer, if you haven't owned a property in 10 years, and you can save tens of thousands of dollars by using this scheme. Chat to a mortgage broker like us, and we can see what you're eligible for. Then you've got your ongoing costs. You need to account for these ongoing costs like council rates, strata fees, utilities, home insurance. All these are going to impact the affordability of your new home. Let's start with council rates. Council rates vary by local government, but are typically based on the property's value. For a $400,000 property, they can range from $1,000 to $3,000 annually. Home insurance. Home insurance costs also depend on several factors like your location, how the place was built, the age of it, and level of chosen cover. Roughly for a standard home insurance policy, you might expect to pay $1,000 to $2,000 a year. If you buy a unit, then it's going to be included in the strata or body corporate fees. Strata fees. So these only apply if you're buying a townhouse or unit, but they include building insurance and maintenance costs for common areas. These can vary pretty significantly. For a $400,000 property, you might expect somewhere between sort of $2,000 to $5,000 annually, depending on the amenity and locations. Like I mentioned earlier in the video, this can impact the amount that you can borrow from the bank. So chat to your mortgage broker if you think it's going to be a lot more, just to see how it's going to impact your borrowing capacity. Utilities. Utilities include water, electricity, gas, and ongoing costs. Water rates can vary, but you can expect to pay $200 to $300 a quarter. Electricity and gas vary widely on usage, but an average household might spend $1,500 to $2,000 a year on each. Maintenance. Ongoing maintenance costs for homes can vary greatly depending on the property's age and condition. As a rough guide, setting aside about 0.5% to 1% of the property's value, so if you're buying a $400,000 home, $2,000 to $4,000 a year can help cover these expenses, but they're going to depend on individual circumstances, the age of the property, that sort of thing. In total, for a $400,000 property in Australia, excluding mortgage repayments, but including council rates, insurance, strata fees, and maintenance, you could be looking at paying $5,000 to $14,000 a year in annual costs. This is a pretty broad estimate, but it's important to do a bit of research specifically on the property location that you're considering. I had a situation recently where a client was looking at buying a property in a flood-prone area, and the insurance costs pull out from $2,000 to $10,000 a year. So if possible, you want to check this out before you're even making an offer. Breaking down this monthly cost, you're going to be looking at somewhere between $650 to $1,500 of additional fees per month. So how does this impact your affordability? With an annual income of $70,000 equating to a monthly income of around $5,833, and considering a mortgage repayment of around $2,100 per month, plus those additional costs of $650 to $1,500 a month, your total monthly housing costs could range from $2,750 to $3,600. This means you could be spending approximately 47 to 62% of your monthly income on housing costs. Financial experts often recommend spending no more than 30% of your gross income on housing costs to remain comfortable, though there is some flexibility up to 40% depending on how you can manage those expenses. This is where it's important to do the numbers up front to make sure you're going to be comfortable and not affect your affordability to cover other expenses, save money, and maintain a comfortable lifestyle. It's really important to think about these expenses and perhaps look at ways to reduce your housing costs to maintain a balanced budget. Keep in mind, this is based on a single income of $70,000. If you and your partner are both earning $70,000 a year, then it's quite different. Two people on a combined income of $140,000 can borrow up to $653,000. This increased borrowing capacity allows for greater flexibility in choosing your location, the type of property, and making it possible to consider homes that were previously out of reach. Let's take a look at what you could afford with different deposit levels as well. 10% deposit. With a 10% deposit of $65,000, the total value of your home could approximately increase to $700,000. With a 15% deposit, boosting to $97,500, it could increase to $750,000. A 20% deposit equating to $130,000 means you could look at $783,000. Now, keep in mind, this isn't factoring in stamp duty, which varies from state to state. So hit us up at huntergalloway.com.au and we can do a free assessment in your situation to see what's possible. With a budget in these ranges, your options expand a lot. Dual income buyers can explore properties in more desirable neighborhoods, larger homes, and with more features and amenities. This budget can also provide access to new development areas, offering more options in a place you can call home. With this increased borrowing capacity, it's important to consider your long-term financial stability and the potential impact of life changes like starting a family with one partner, taking a career break, etc. Planning for contingencies and ensuring the mortgage remains manageable under different circumstances is important. So as we wrap up our journey through understanding how much home you can afford on $70,000 income, whether it's single or dual, it's clear that it's pretty complex. This is where the value of a mortgage broker can help. A mortgage broker can help demystify this process, help you get a clear understanding of what's possible, and help you secure a loan for your future home. We have access to 30 different lenders and different policies that will make this process easy for you. At Hunter Galloway, we're the home for home buyers across Australia. We want to make this journey as smooth as possible. So if you want help or even just a free assessment on where you're at and what's going to be possible over the next few years, hit us up at huntergalloway.com.au. Until next time, see you guys.